Be Wealthy and Smart, episode 1062.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about 10 real estate markets that are cooling the fastest, and also 10 of the slowest cooling U.S. housing markets. This is helpful for anyone who's a prospective buyer or who just keeps up with the real estate industry. I like to follow the trends and see what's going on, and this article really piqued my interest. What it's showing us is that there's 10 cities, mostly along the West Coast, that are starting to cool the fastest. And that's not surprising because we've been covering how people are moving out of high income tax states to no income tax states like Florida, and how people have been moving out of high priced real estate states to lower priced real estate states. And it's interesting because of the list of the cooling properties, 6 of the top 10 markets are in California, including 3 in the Bay Area, with 4 other Western cities rounding out the list. Of course, one of the reasons for cooling throughout the country is rising interest rates. Interest rates have gone from roughly 3.5% to 5.5%, and that's affected the affordability of homes. For example, in California, if you're buying $1 million home with a 20% down payment, your monthly mortgage payment might be roughly $5,750 a month with a 6% interest rate, depending on taxes and homeowners insurance, which is $1,400 higher than with a 3% interest rate. So here are the top 10 fastest cooling U.S. housing markets in the past year, and this is their median sales price as of May 2022. So that means half of the prices were higher, half the prices were lower than these numbers. All right, the fastest cooling market in the entire country is San Jose, California, $1.56 million. The second fastest cooling market is Sacramento at $610,000. Then Oakland at $1,070,000. Seattle, Washington, my former hometown, where the real estate market has been hot, one of the hottest in the country for years, is finally cooling, $850,000. Number 5, Stockton, California, $576,000. Number 6, a market that's been very strong for a long time, Boise, Idaho, $550,000. Number 7, Denver, Colorado, $612,000. Number 8, San Diego, $875,000. Number 9, Tacoma, Washington, $575,000. And number 10, downtown San Francisco, California, $1.62 million. So a few on there were surprising to me because Seattle has been so strong for so long, as has Boise. And certainly other markets have been very strong on that list as well. So I'm wondering if there's almost a tech aspect to this list, where some of these cities that have been so hot for so long have been really strong with jobs in the tech sector. And I'm wondering if now that may not be the case anymore, if there's some layoffs or something happening that is causing this, particularly in the tech sector. All right, let's talk about the 10 slowest cooling U.S. housing markets. Number 1, Albany, New York at $289,000. Number 2, El Paso, Texas, $238,000. The number 3 slowest cooling U.S. housing market is Bridgeport, Connecticut, $570,000. Then Lake County, Illinois, $324,000. The 5th slowest cooling U.S. housing market is Rochester, New York, $212,000. Then New Brunswick, New Jersey, $465,000. The 7th slowing cooling U.S. housing market, Cincinnati, Ohio, $265,000. Then Akron, Ohio, $200,000. New Haven, Connecticut, $310,000. and number 10, Virginia Beach, Virginia, $325,000. So while growth may be slowing, it doesn't mean that prices are going to significantly drop. But a lot of the high housing prices have been held up due to lack of inventory since the pandemic. So now the housing markets that are cooling fast are having a lot more inventory come on, whereas the markets that are cooling slowly are having less inventory come on. For example, Seattle's inventory is up 40.9% from a year ago. And although prices are still rising, now they're kind of rising a little bit more slowly, don't have as many multiple offers in some markets, etc. And the expectation for one-year median home price growth dropped to 4.4% from 5.8% in June, according to the Federal Reserve Bank of New York's survey of consumer expectations. So if you've recently purchased a home, you may have concerns about the home's future value, especially in a cooling market. The good news is that most buyers got locked into a lower interest rate, so payment should be more manageable than someone buying right now. That's according to Matthew Chansey, a certified financial planner with Coastal One in Tampa, Florida. If you overbid on a property, you may be underwater in the short term, meaning you might owe more on the mortgage than the home is worth. So that's always something to be aware of and to be careful if you're getting into bidding wars. But overall, we're seeing a little bit more loosening up in the markets, a little bit more inventory coming on. That's good news. We're getting back to a little bit more of normalization of markets, as they say. And Melissa Cohn, Regional Vice President of William Ravis Mortgage, said the velocity of price increases will certainly diminish significantly, predicting a healthy normalization of the real estate market. She also said one of the reasons why we've had this frothy, overheated market is just lack of inventory. So there you have it. We're getting a little bit more into balance with some more inventory coming on. Certainly a year from now, if interest rates are higher, I think we'll see more of that. And the people that have been holding off waiting to sell their house because housing prices just kept skyrocketing, well, now they're going to be in a little bit more of a rush to get their house on the market before prices start to decline. So I thought this article was very interesting. I'll put a link to it in the show notes so you can take a look at it. Don't forget, all of my podcasts are on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.